This is Bloomberg Crypto, a daily Bloomberg iHeart podcast.
And I'm Philip Lagerkrantz in today for Stacy-Marie Ishmael. It is Monday, December the 19th. It has now been just over a month since former crypto exchange FTX filed for bankruptcy. And it didn't take long for events to catch up with its founder, Sam Bankman-Fried, the one-time crypto wonderkind known to most people as SBF. Bankman-Fried has been arrested in the Bahamas, and US authorities have unleashed some truly stunning charges against him, essentially accusing him of having run his entire crypto empire as a personal piggy bank and defrauding customers who put their money onto FTX. Bankman-Fried himself has said it was all down to sloppy accounting and mismanagement, which is all the more surprising given that he spent 3 years at one of the Wall Street firms that's famous for its level of caution and its attention to risk, namely Jane Street. Bloomberg's Hannah Miller has been reporting on this.
This is just going to be a story that takes a long time to unfold, and that there are many more new developments down the line.
And she joins me now for this podcast. Hannah, welcome to the podcast.
Thank you so much for having me, Phil.
All right, so this is obviously an extraordinarily busy day when it comes to the topic at hand, but let's first start off with the big bombshell of the day. Sam Bankman-Fried has been arrested in Bahamas, and the DOJ, the SEC, and the CFTC have all gone after him. And this is obviously like there's stuff happening all the time. This story is evolving. We don't know everything yet. But for the listener who's just coming fresh to this, what are the most serious allegations, or how would you sum up the most serious allegations against Sam Bankman-Fried and FTX?
Yeah, well, this is unfolding in real time right as we're recording, which is pretty cool. But yeah, the charges are very, very serious. There's allegations of fraud, and a lot of this boils down to misappropriation of customer funds. So did Sam Bankman-Fried use customer deposits to cover Alameda's debt and expenses? There's also a question of whether he used customer funds to, support his own personal expenses and those of his family and other employees. So there are a lot of questions here, and it's again just happening as we speak. So it's a pretty exciting time for the industry.
But we're not just talking about a couple of customers here, huh? I mean, we're talking about hundreds of thousands of customers, including retail savers who put, probably their lives' pennies on this, huh?
Yeah, it could be up to 1 million customers. That was brought up in the House hearing. And yeah, it's been really stunning to see, testimony from the current CEO of FTX, John J. Ray.
The FTX group's collapse appears to stem from absolute concentration of control in the hands of a small group of grossly inexperienced and unsophisticated individuals. First, customer assets at FTX.com were commingled with assets from the Alameda trading platform. That much is clear. Second, Alameda used client funds to engage in margin
It's just sad to see. This is, people's personal funds, life savings, that they might never get back.
Speaking of John Ray, I mean, this guy has seen it all. He was running Enron's bankruptcy, wasn't he?
Yeah, he's very experienced in this area. He's a respected name. I think it was pretty shocking when, he first took on the post and, just in the bankruptcy filing said that this was some of the most, shocking things that he's seen at a company.
Okay, so we're going to rewind a little bit, and we're going to talk a little bit about where Sam Bankman-Fried came from, and where actually a lot of his fellow senior executives at FTX came from in Alameda. And that is a Wall Street firm called Jane Street. And he spent 3 years there, but can you tell us a little bit more about what is Jane Street? What do they do exactly?
Yeah, Jane Street is one of the most elite and respected quantitative trading firms in the industry. They're a market maker. They create liquidity on markets. So Jane Street's incredibly respected. The people who come there, have incredible educational backgrounds. So yeah, this was a top-notch firm that Sam Bankman-Fried cut his teeth at.
And what do they teach people about things like taking risks, for instance? When you work at Jane Street, what do they drum into you?
Yeah, they're risk obsessed, which is really interesting. You're taught early on how to best prepare for a worst case scenario. Jane Street prides itself on being able to spot areas of risk that other firms are unable to. So it's really interesting that this firm, which is so obsessed with preparing and seeking out what are the riskiest spots, that this is where Sam Bankman-Fried got to start.
Yeah, we're going to get to that very soon. First, a little bit about, because it's sort of a brainy culture. Would you say at Jane Street, it's not really your kind of traditional Wall Street bro culture here, huh? It's more, I guess brainy is the word, mathematical.
Yeah, it's super nerdy. It's really nerdy. This is, it might not be like a name that you recognize right off, like Goldman or, whatever. But the people who do know about Jane Street, if they find out that you work there, there's a certain level of respect attributed to you.
All right, so let's fast forward to FTX. And you have this absolutely beautiful line in the story. And I'm going to quote it verbatim. It goes like this. The easiest way to describe the culture that Sam Bankman-Fried created at FTX, the opposite. Can you explain that?
Yeah, so FTX was all about risk and taking risk. And basically the culture was very different as well. So one of the anecdotes that I love that I collected in gathering this reporting was that an early FTX investor visited Sam in like this penthouse suite in the Peninsula Hotel in Hong Kong, which is super fancy. And she brought a government official who was a friend with her. They walk in, everyone's playing beer pong, everyone's having a good time. It's this party culture. And the government official turned to her and said, "You invested in these kids?" So it's I think a pretty stark contrast. And now with what's coming out about what Sam Bankman-Fried has allegedly done, it's like he took every risk in the book, allegedly. Which
is the most, just insane thing, that you, and not just Sam Bankman-Fried, but several of the others that he started FTX with. Basically, they come from this firm that drills into you, know the risks, know exactly what they are, prepare for the worst scenario, and they move and they start their own company, and it's the entirely inverse of that. It's basically do whatever you feel like almost, huh? How did the people that you interviewed for this story, did they have any good explanations for how it might have turned out that way? Is it just a sort of coincidence? Is it a manifestation of what Sam Bankman-Fried is like? How does it go this way?
Yeah, it's tough to say. And I should note too that the most notable person who also came from Jane Street is Caroline Ellison, who she joined Alameda Research a few months after it got started. She got promoted to co-CEO and then was the sole CEO when all of this went down. So, and she also was romantically involved with Sam Bankman-Fried. So it's very interesting that, the two biggest names coming out of this story came from Jane Street. And I think in talking to people, about what Sam was like, he was someone who, I think liked to have a lot of control over what he was doing. He made the shots. I've spoken to early investors in FTX who said, they were actually really struck by how casual he was about certain things. and how willing he was to take risk. So it's hard to say, I mean, clearly he wanted to do something different because he left Jane Street after 3 years. And this is also a company that isn't very big on, you doing your own thing or building your own project. And, I think he definitely wanted to branch out, and that's obvious. And look where it led him.
Yeah, look where it led him. And we would be amiss if we did not get into the bookkeeping at FTX or what seems to be the absolute lack thereof. It seems like this was an empire where there was no real paper trail, huh?
They use QuickBooks, a multi-billion-dollar company using QuickBooks. QuickBooks. Nothing against QuickBooks. It's a very nice tool.
Yeah, I mean, I think it's been very hard for John J. Ray to untangle what's happened here. One line struck me from the congressional hearing, and it was Representative Maxine Waters who said she couldn't believe how easy it was to steal from the cookie jar.
I'm so deeply troubled to learn how common it was for Bankman-Fried and FTX employees to steal from the cookie jar of customer funds to finance their lavish lifestyle.
So there are serious questions about accountability here. This is just going to be a story that takes a long time to unfold, and that there are many more new developments down the line.
We'll be right back with more from Hannah Miller. You have a really interesting vantage point here because you cover the VC industry. And some of the best in the business got really badly burnt here. What are your thoughts around this? And like in your reporting around the VC players that back these guys, how is this possible? Because these are supposed to be people who know how to do due diligence on somebody.
There's serious questions around how FTX and Bankman-Fried were enabled to become as big a force in the industry as they were. And I think there are a lot of questions around how early investors did do due diligence. Why weren't more difficult questions asked of the people at FTX? And why was there such a rush of funding that came to them? I think it helped Bankman-Fried that, was born and raised in the Bay Area, and, he knows Silicon Valley culture. I think investors kind of thought of him as one of their own. I think also what was happening with the industry at the time, crypto was really soaring. The price of Bitcoin is going up. People are getting really interested. These startups were scoring massive valuations after only being, a year or two old. And I think for some VCs, there was a serious fear of missing out. And they saw FTX as a way to, get a taste of crypto, get a taste of that success. And here you have Sam Bankman-Fried, who presents himself as this boy wonder, who seems like the smartest person in the room. And people are willing to overlook things and trust him for those reasons.
Yeah, I do. I remember back in, I think it must have been January and February, you were seeing these funding rounds where, somebody had raised at a valuation of $1 billion in November, and lo and behold, in January, they were doing $5 billion, huh? So you're talking about valuations that went 5x, 10x in the scope of 6 months, huh?
100%. It's really remarkable looking back on it. And now it's, looking at how funding in the space has steeply declined. And that's going to be a drop that I think we'll see, for the fourth quarter once that finishes. And moving forward, VCs are having second thoughts about crypto. I mean, there are obviously some still very much committed to the industry who identify themselves as being crypto native venture capital firms. But I think more traditional firms who maybe do more general tech investing, they're asking themselves whether they should continue betting on blockchain.
And there we have seen, and you reported on, for instance, Amber Group, which is kind of trying to raise money right now, but having to settle for valuations that are more like in line with what they had 6 months or a year ago. So you're already seeing that kind of caution seep into valuations, aren't you?
Yeah, we've seen companies pursue down rounds as well as flat rounds. So down round would be at a lower valuation, a flat round would be at the same valuation of a previous round. So it's a reality check for these companies. They know that the market has shifted. For some people I've spoken to, they're like, okay, this is where things should be. Like this is more realistic. We can now kind of cut through the fluff around the industry and really, just start to innovate. So it'll be interesting to see what happens down the line. Who's gonna still be standing at the end of all this.
Absolutely. And stay tuned for that. Hannah, thank you so much for coming on the podcast.
Thank you for having me.
And that was Bloomberg reporter Hannah Miller. You can find more of her reporting on the Bloomberg terminal and on Bloomberg.com. For more, be sure to check out our twice-weekly newsletter, Bloomberg Crypto.
This is Bloomberg Crypto, a daily podcast from Bloomberg and iHeartRadio. For more shows from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts. Send us your comments, questions, or suggestions for the show to crypto@bloomberg.net. The supervising producer of Bloomberg Crypto is Vicky Vergolina. Our senior producer is Janet Babin. Our producers are Mohammed Farouk and Sharon Barrero. Our associate producers are Ty Butler and Moses Undum. Desta Wonderad is our engineer. Original music by Leo Sidran. I'm Stacy-Marie Ishmael. We'll be back tomorrow.